Cathie Wood joins us now in an exclusive interview. Cathie, good afternoon. Thanks so much for joining us.
Happy to be here, Wilfred. Thank you.
Let's touch, if we may, on this sort of current pullback. Do you actually welcome that as a long-term buying opportunity for a lot of the stocks you love, or are you feeling the heat a little bit?
Oh, I love this setup. The last time I was on, I think I said that this rotation was good news because it meant the bull market was broadening out. It was strengthening. And the worst thing that could have happened to us is to have the market narrowly focus on just our ilk of stock, the innovation space. Instead, it has broadened out so that year to date, I think it's energy's up 40%, financials are up 27%. And from the peak, in mid-February, our strategies are down. The ones that have been hit the hardest, not all of them, are down 30 to 35%. I love that setup. We're at, from our point of view, 5-year time horizon, nothing has changed except the price, and therefore the return, which at the peak of the market and of our strategy in mid-February, we expected a compound annual rate of return of 15% on average per year from our strategies. Now that the prices are down, that number is somewhere in the 25 to 30% range.
You may love the setup, Cathie, but it hasn't been great for your business. I mean, worst start to the month on record. You've seen outflows of $1 billion. How are you managing these declines? And there's speculation out there that if the outflows continue, it would be hard to meet redemptions.
No, well, first of all, I don't have to worry about redemptions. ETFs, the ETF ecosystem is a beautiful thing for portfolio managers. I highly recommend it. So what that means is when I am making decisions, they are investment decisions. I have nothing to do with the flows. The ETF ecosystem, the authorized participants, the market makers outside of ARK, although, of course, we're overseeing their actions, they are facilitating our flows. And they're doing it in many ways with algorithms and derivatives. I think the ecosystem has become quite profitable for them. So we have experienced no problem. If you look at our spreads, there's been hardly a disturbance in our spreads. As far as flows, actually, we've been very gratified. I think if you go month by month now, this is endpoint to endpoint, we have not seen a month of redemptions yet. I would be... I don't want to say never. I mean, of course, we're going to get redemptions. And in fact, in the ETF structure, when we get redemptions, because of the in-kind nature of redemptions, we are able to offer a much more tax-efficient strategy or portfolio in this wrapper than we ever could have in a mutual fund.
Shepard Smith here. Thanks for watching CNBC on YouTube.